Hi and welcome back to the channel. Now, before I walk through all of the key charts and data that I know you all tune in for, it's been a great few weeks since our last video. It's been a bit of a roller coaster, which has, as expected, resolved to the upside, and I do hope my work over the last few months has continued to help in some way. Now, there continues to be a massive move in a lot of the beaten up areas, as well as the continued flight to safety in mega cap tech, which is of course set against a backdrop of economic turmoil. This week I'm going to walk through a high level broader market analysis with some key market levels and also some stocks and ETFs that I think you can probably add to your watch lists for the next couple of weeks. You'll probably find a lot of value from my work, and hopefully the Scottish accent isn't too difficult to understand. Now, everyone's asking me how far can this market upside go, and of course I have some charts for that. On one hand, you've got all of the screaming perma bears screaming that it's just a matter of time, whereas on the other hand we've got a lot of the bulls screaming that the market bottomed in October and to expect all-time highs by the end of the year. Now, for clarity, I'm neither a perma bull or a perma bear. I'm very open to all outcomes. I analyse the data as it comes in, but managing risk is always priority number one. Investor sentiment is now showing that there is extreme greed out there, which is set against all of the negative headlines and news catalysts. But I'll do my best this week to filter out all of the nonsense and give some context via my charts. Now, for disclosure, myself or my clients may already hold some positions in some of the names mentioned, and I have highlighted those disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm told that I'm really good at removing a lot of the confirmation biases from my charts, and as most of you know, I don't use the magical hindsight indicator. Now, some of you who follow me really closely on Twitter were asking me about a tweet that I put out that got a lot of attention around 10 days ago or so. So I'll touch on some of those charts and what I'm currently seeing. I timestamp all of my work, which most of you already know, which is massively important in my field. I'm not a short-term day trader looking for little 20-cent moves. I'm looking for structural trends in the market that will last weeks to months, and I like to use systematic process and logical targets. My work is really for everyone, everyday investors, traders, options folks, financial advisors, money managers, and I'm told that my work is among the very best in the business. I keep my charts really clean, so hopefully they all make sense. Now, if you are quite new to my work is really well known for my ability to highlight the big risk on, risk off turning points in the market. Like I said before, my work is all time stamped. I'm not one of those analysts who make broad market calls before they eventually play out 6, 12, 24 months down the line. Very few go on the record with their work. I'm one of them. But to give myself a little bit of credibility, for those of you that are new to the channel, some of my recent time-stamped calls, the market crash a year ago, I called pretty much every market turning point last year, the market rally in June, the top in August, and then of course the big one, the market bottom in October, and of course the rotation back into tech this year. And you can go all the way back to the crash of 2020, where I got a client's defensive ahead of that as well. I do have a track record of being mostly correct, which helps. And if you do find value from my work, please do like, share and subscribe on YouTube, and feel free to follow and share on Twitter as well. Before I get into it, please pause the video, make sure you're comfortable with that very important disclaimer before we go any further. And if you are somebody that values technical analysis, we have just recently partnered with TradingView. They're incredibly cost effective. The analysis is incredibly clean, perfect for everyday traders and investors, there is a link in the description for a free 30-day trial. But enough about me, let's get into these charts. Now, the S&P 500, of course, gets all of the attention, I'm sure, from most of you. We can see that the S&P 500 has broken out over the last couple of weeks. And I think the big question everybody has is, well, Sam, how much further can this continue to go? One of the charts that I presented a few weeks ago in our last analysis video was the longer term structural chart for the S&P 500, which incorporates the Fibonacci extension levels. Now, as you can see from the chart, the chart has a lot of merit with these Fibonacci levels. We can go back, of course, basic support and resistance would have helped with the dot-com bubble and of course the financial crisis. But since then, these extension levels have a habit of showing us where the market could potentially pause for a little bit. The 2014-16 sideways market, the 2018 correction, we had a failed breakout in the COVID crash, and then, of course, the most recent, I like to just call it the economic crash of 22, failed breakout as well. So we are pushing back against these levels, this 4400 level. Now, support and resistance isn't drawn with a thin pencil, it's really with a crayon, and this level here is an area of interest for me. Now, of course, we all know the mega cap tech names have been on a massive rocket ship this year. We just need to look at the performance numbers for, Nvidia, of course, comes to mind, I'm sure, for many of us. But again, levels of interest that I'm very, very keen to keep an eye on. We're looking at this, 372 level, but to the other side of things, with our clients last weekend, I was highlighting historically that although the market is, of course, overbought at the moment, we can see that if we just use a basic RSI indicator, which is up at 78, we know the market's overbought, but we can see historically it can go a little bit higher as well. Historically, 85 on the daily chart is a level that we have seen, so I don't rule that out. So whilst yes, there's a lot of names that have ripped astronomical numbers this year, if we get a breakout above this 372 level, it then brings in the all-time high targets, and that would be supported by RSI, which can, as I said, get as high as 85. I do, on a personal level, probably expect a little bit of digestion of gains, but something I've learned over the years with the market is the market doesn't care what I think. It doesn't care about my levels. The market can, of course, just cut through these levels like a hot knife through butter. So that's where systematic process on individual names for me really shines. We know that the small caps have been massive underperformers this year. They've really only started to get going. In our analysis a few weeks ago, I was just highlighting the possibility that the small caps were potentially setting up for a breakout. We've had a monster move in the small caps since then. I hope everybody has done incredibly well. But the one chart snapshot, I think, of the broader US markets probably shows it best, with the S&P 500 going out at new 9-month highs. We've got 13-month highs in the triple Qs, and with the small caps, whilst we are chopping sideways over the last week or so, there is a potential that we are setting up for a bullish flag potential breakout. It's not just the US markets, we're seeing it around the world. The All Country World Index is breaking out to new 12-month highs. There is a very, very strong correlation with the S&P 500, which I have overlaid to this particular chart. So there's a lot of bullish charts out there. We know communications sector, new 13-month highs, that's not bearish. But this is the chart that I think has probably held up the best. If we cast our minds back, a couple of months where we had all of the nonsense with the small regional banks. The financials have held up remarkably well. We are starting to see signs that the financials might be catching a bid, but the regional banks, and for disclosure, we made a real-time bottom call on this on the 5th of May for our clients. It's been working very, very well. I did post this chart to Twitter as well, just highlighting that our logical upside targets had been met, and now it's just a waiting game for a further potential breakout above $45. Would make sense for new entries. The micro caps have come back to life, I guess, like the small caps have recently. So there's a lot of the riskier areas of the market that have massively outperformed over the last couple of weeks. But this is one of the charts that, again, I've got my mind and watching very, very closely, just like the triple Qs. If you have a look at the weightings of the XLK ETF, XLK has just been hitting target after target, and it made its final run this week. It is fading here today, intraday, at all-time highs, but I think that's very, very normal and very, very expected after the run that it's had. But when we look at technology, we can obviously look at the mega caps, the Microsofts, the Apples. That's all great, but within technology we have all these little subsectors, and for me, looking at each chart on its individual merits comes into play. So whilst we might expect a little bit of a pause within the mega cap names, we can go into maybe cybersecurity names that are potentially basing and breaking out as well. So I think maybe areas like this might make a lot of sense for some of you, maybe to do a little bit of due diligence. Now, what I would say is, as I record this, there is a couple of hours left in the markets. It is options quad witching today, so I am expecting a little bit of volatility towards the end of the market today. So whilst the charts are of course holding up, and many of the charts look great, we'll need to see how the market closes today. Hopefully it is a massive nothing burger, but we will see how things develop. Semiconductors have now hit upside objectives for us, but with that said, some of the charts that I like to use are relative performance charts, and if you're a money manager and you are looking for outperformance relative to the S&P 500, which is the benchmark that most of your clients will be setting, we can see that on a relative basis the semiconductors are breaking out. So the big question I have at the moment is, if we've got the semiconductors breaking out on a relative basis, could that push semiconductors to break out on an absolute basis, which would be mind-blowing considering the runs that many of them have had. But again, I don't like to argue with my charts. Now, what I would say is, I'm about to run through around 20 individual names and ETFs that you can add to your watch lists for the next few weeks. But if you're still here, please do hit the like button. It tells me that you're getting a little bit of value from my work. It is of course completely free, and it would be massively appreciated if you hit like and subscribe. But we can see that Nvidia is just completely motoring. For disclosure, we put this to our clients at the start of the year. Now, I did actually cover this chart a couple of weeks ago, and I am probably kicking myself a little bit with this one, because I actually sold my long-standing position here in Nvidia somewhere in here, and of course what's happened is the market's just kept going higher, and my systematic process, which has been built and tested, etc., continues to move higher. So I'm a little bit frustrated with it, but the trend is still higher. Our clients are still working with upside objectives here around the 500 level, which is a confluence of Fibonacci levels. Now, whether or not you believe in Fibonacci levels or not, that's fine. But these psychological levels around $500 oftentimes make a lot of sense. We can see with Apple again breaking out to new all-time highs this week. Again, disclosures, but again, trying not to fight the trend. And I know there's many that see stocks at all-time highs, and you can see that it's a little bit overbought on RSI. But I would just urge anybody that's maybe new to the markets, or maybe new to technical analysis, to maybe not fight the trend. It is a mostly losing endeavour, unless of course you get a signal that the market is about to drop, and of course the stocks are about to drop. Google has been chopping sideways for the last few weeks. We are still working with longer term upside objectives here at all-time highs around 150, but it is curious to note that this level around 122, 124, it is building a little bit of a base, and hopefully Google can catch a bid moving forward. Microsoft has hit our targets this week, but we are looking for this, very much like Apple. If it can get a breakout above $350, that might offer opportunity for the next stage in the trend. Amazon, no change to this chart. We are still working with upside objectives here around 145. Please note our systematic process has it now up at around 118. So there is a healthy profit already built into price, but we are still working with 145 as an upside objective. We are seeing AMD pull in a little bit this week. Again, probably very, very normal. I think after the run that it's had, it's cooling off a little bit. But I think if you are holding AMD, it would be a bit of a concern if we break below this level around 116. There is of course a gap to fill. So those are the levels of interest that I think for AMD for me. DraftKings, again, looking for a potential breakout here for the next stage in its trend above $27. MasterCard is really, really interesting to me at the moment. This has been basing for a couple of years. And I think for me, I think if MasterCard can get above that $400 level, I think it then brings in a logical target there around 530. We've got Netflix, which continues to go from strength to strength. Now, I am covering this again because I have been covering this over the last couple of analysis videos that I've put out to social media. Our systematic process has it now at 410, but we are still working with upside objectives there around $500. Tesla has been on a rocket ship. I think if anybody's out there and you're holding Tesla, I'll just say congratulations. It's not easy, especially when you pay attention to a lot of the FinTwit clown shows, and they've all got their fundamental opinions, and EVs, etc., etc. It's not easy to stay bullish on Tesla when you've got all of the nonsense out there, but we're seeing the shorts are being absolutely decimated. A lot of short covering here, I've no doubt, on this rally. So, if you are out there and you're holding Tesla, like we have, our upside objective here that we're working with is around $315. Will it get that far? Of course, I don't have the answer to that. We've recently been massively overbought. RSI got to 90. But the trend has kept going. There was a little pullback here for a couple of days, but the thing just keeps going and going. So congrats everybody that's holding it. We're hoping to get as high as that 310, 315 level. Meta has now hit targets. I think when you look left on the chart, which is something that I like to do, we've recently just filled gap here dating back to January 22 after a massive base breakout. So again, same message as Tesla. If you're out there and you're holding Meta, massive congratulations. It's not been easy, but what I'm looking for here is if Meta can get another breakout, which would seem crazy after 128% move. I think if it can get back above this 295 level, then that could be a further breakout, and then it really takes the next leg higher, which seems utterly crazy to say. Uber continues to move higher after its base breakout, new 15-month highs. We've got CrowdStrike, maybe going back to the cybersecurity chart that I presented a few minutes ago. Again, for disclosure, this is one of our charts that we recommended here on this big pullback. It's been moving higher, and when you, let me try and zoom in here, not zoom out. When you zoom into the chart, it does look like it's setting up a nice little base here. So I think if it can get a confirmed breakout above that kind of 162 level, then I think CrowdStrike it might be appealing to many of you. Palantir, again, I get asked about this all the time. It seems to be one of the AI plays, and of course it's broken out recently above big levels here at $15. So the message would be, remain bullish. I think remain bullish above $15. I think if it starts to break down here, then that might be a bit of a problem. MongoDB, MDB, massive gap up on positive earnings. It does look like it's potentially basing, which again seems crazy to say after a 60% move. But I think provided it is above 365, then it could be basing and taking another leg higher, market dependent of course. And big breakout in Berkshire Hathaway over the last 10 days. I have been covering this sideways range for a while. It's been a buy low, sell high chart, but it does look like it's breaking out. And with it being a big component of the financial sector, which I should say will have a little bit of a weighting in our clients' work this weekend. I think the breakout there in Berkshire Hathaway looks quite constructive. Now, one area of the market that I did want to touch on quite heavily this week is a lot of the Asia, the Chinese tech names. Again, my work's had a lot of attention because I've had made some big calls here in the space in Asia over the last few weeks. Now, one of the charts that I've been working with is the emerging markets chart, which, if you don't know, is basically made up 40% China. And I'm looking for a potential change in trend here. Now, the early signs are that over the course of the last week, the change of trend is very, very constructive. We've seen some big moves in China this week. We are working with, obviously, logical targets. I was asked a question today on Twitter, which was quite funny to me that, what's your target, Sam? 46. And of course, yeah, the COVID crash levels comes up perfectly with a 50% Fibonacci level. This is the chart that I've been working with. So again, if we can get the emerging markets to catch a meaningful bid, a 10% move, for example, then of course that would be good news. We're seeing potential failed breakdowns in Hong Kong and of course the Chinese ETF MCHI. We're seeing the Hang Seng, which has put in a failed breakdown. And of course, it's not just with China. We're seeing it across Asia. Taiwan making new 12-month highs. We're seeing South Korea, the Kospi index, and of course the Tokyo Topix making new highs. So I'm looking at China with a lot of interest. We've put some names to our clients over the last couple of weeks. Of course, the Chinese K-Web has been breaking out above its 200-day simple moving average. And of course, we've got the Japanese EWJ, which is breaking out both on an absolute, and it does look like it's maybe starting to perform on a relative basis. And we've got South Korea, again, looking like it wants to break out. And of course, if you are looking for some individual names, this is one of our premium charts that we put to our clients a few weeks ago, just highlighting that Alibaba could be potentially setting up now. The reason I don't tend to post and present charts unless a chart pattern is confirmed, but what I do like about this chart is that you can define risk below recent lows, and of course hindsight tells us that it's been moving over the last few weeks, but ultimately we hope to see it test 120 if Asia and China can continue to catch some kind of meaningful bid. Now, if you are still here, please do hit the like button, share with your friends. If you are new to my work and you're wondering who it is I am and what it is I do, please do jump on to our website at honeystocks.com. We provide memberships to all of our premium work for our clients and members. Every single weekend we provide our premium weekend analysis with all of our best charts and updated work, all of our high conviction trade ideas, all of our halftime analysis, which is an analysis that we provide every single Wednesday to our clients and members. We provide access to an incredible community. We provide access to all of our chart books, which cover all of our stocks, ETFs and commodities. And also, if you are maybe new to technical analysis and maybe systematic trend following process and systems process, I'm told I've built one of the very best technical analysis programs there is. But just to quickly show you what our premium work looks like, this is a recent alert that went out for Tesla, which has of course done very, very well. My charts are very clean. I think that's something to say, very clear instructions. Tesla was a big one at the start of the year as well, which was basically a play on capitulation. Meta, which I've just presented that chart as well, has been a massive gainer. A recent alert that went out for Amazon, which has been massive. And of course, Apple has hit upside objectives. But I am very, very unique in what I do. I have very much a quality over quantity approach to my work. I'm not someone who spams your email inbox with 10 alerts a day. I couldn't think of anything worse. But I publish on our website the list of every single high conviction idea that has ever gone out to our clients for complete transparency. So feel free to jump on to our website to see if the types of stocks that we recommend are the types of stocks that you like to buy. There's not any penny stocks or low float stocks. It's all high quality names, usually with really good fundamentals behind them as well. So again, feel free to check that out. But I think my work is generally a good fit for anyone that has a mid-term approach. Maybe you're looking to build a systematic process, learn technical analysis. Maybe you're somebody that's maybe too busy with work, life, family, business, or maybe you just want to be part of a community, which I should say, it's not your typical community. It's a community that I think for those that are logical, for intelligent people, for example, there's a lot of money managers, doctors, lawyers, etc., that seem to gravitate towards my work. If you're sick of hunting around social media and you just want to be part of a community, then feel free to check out our website. My work might be a good fit for you. But if you are still here and you have stuck it out to the bitter end, thank you very much for watching and have a wonderful weekend. Thanks.